Hey everyone, Catch 'em All Collectibles here. Today's video is going to be a little bit different, but I think it's something that's really important for the Pokemon space. I think it's something that's really just not considered in general by a lot of people, collectors, investors, businesses alike. I think underinsurance or complete lack of insurance is just something that's too prevalent out there. And I figured I'd make an informative video talking about my perspective on insurance, why I use it, what type of policy I have, how you can potentially get one yourself. Um, Usual disclaimers with these type of videos. I'm not an insurance professional. I'm not a financial professional. I'm also not a salesman. At the bottom, you can see I offer a link to my specific representative in case you want to pursue quoting a policy. Um, but yeah, I'm not a salesman myself. That's not an affiliate link in any way. That's just I have a positive experience through that business, through that individual, and I want to share, help support someone else in the hobby who helps people insure their collections or businesses. So in this video, I will discuss insurance policies themselves. There are other ways to safeguard yourself against natural disasters, fire, theft, things like that. The use of third-party vaults, safes, bank safe deposit boxes. I'm not going to cover that in this video. That's going to be another video down the line that I've been meaning to make for some time, because I think there's quite a few gaps out there in that and a lot of misunderstandings. That's why I have safes in quotes, especially when it comes to some of the cheap fire safes you might be able to buy at like Walmart. But anyways, continuing on to the video, one last disclaimer. Insurance costs vary wildly based on your age, your risk factors, where you live, your zip code, how much you're insuring. Generally, as you scale into bigger numbers, it gets a little bit cheaper. So numbers are going to vary extremely wildly. I show you a couple of my personal things that maybe you can compare to your own and see how my area, how my age, how my numbers pan out compared to yours. But the next point, I have two tests that determine when I need to insure. This is very much this topic for this video today really borders on personal finance as much as it does Pokemon, probably more so personal finance, but another passion of mine. And insurance came up in our recent conversation, Nick and I, over on the PokeFlips podcast with Peter. So I wanted to do a separate video on it. I've had a lot of people ask about it. So my two tests for determining if I'm going to insure myself on something: wipeout risk. If there's a vulnerability, if something were to occur and I would literally be wiped out, more than 25% of my net worth would just be gone, if not 100%. That's a big vulnerability, and managing and avoiding wipeout risk in investing in personal finance, it is just a generally good practice to follow. And then a 50 years test. And I'll explain that down here. So basically, if 50 years of premiums, if that number, like if 50 years worth of premiums that you pay for that insurance are less than one loss, to me, that's a pretty reasonable insurance. That 50 years of insurance, 50, 60, maybe 70, if you're lucky, is a lifetime of insurance. So if one payout throughout your entire life is more than 50 years of premium, feels like that's a reasonable thing to insure. You're talking about really big numbers. So yeah, first one, auto. I live in New York. It's legally required that I have auto insurance, not collision, but liability. If you owe money on your car, a lot of times the lender, the bank, whoever you loan money from, will require that you get collision. But I drive a small mid-size SUV. I just bought a new one. So it's a brand new mid-size SUV. It was about $30,000. So I pay $80 a month. It's $80 a month for full collision and liability. And if you do the math on it, extend it out to 50 years, that's $48,000. Sounds like a lot of money. Car insurance, all insurance. You buy it to plan ahead for the worst. You hope for the best, but you prepare for the worst. Ideally, you spend all that money and it's wasted completely. Ideally, you never have a single claim throughout your entire life. $48,000 down the drain. Sounds like it kind of sucks. That number is going to go up with inflation too. I just did the math on 50 years of my current premium, which it's going to go up with inflation, but this is just for my quick napkin math to test. But as I said, my vehicle's about $30,000. If I total my vehicle, that alone doesn't really cover 30 years, 50 years worth of premiums. But the big thing, liability. Liability, anyone else who lives in America, the US, where I do, we know that we don't have like universal health care. If you get seriously injured, if you need surgeries, if you go to the hospital, you could easily total up 6, potentially even 7 figures worth of bills. So to me, to pay $48,000, part of it legally mandated, and the other part of it just covering the more expensive part oftentimes is liability, because those numbers can get really big. So yeah, auto is a personal policy that I carry for the reasons I show. Wipeout risk is there, and 50 years of premiums can be eclipsed by one claim. One claim you could easily have centuries worth of premiums. Home is another one, even cheaper than auto, which is kind of crazy when you think about it, but I guess you crash your car more often than your house burns down or something like that. So my homeowner's insurance, that's for the dwelling and liability again, because that's always a thing. $50 a month, 50 years worth of premium, $30,000. To me, that's like a no-brainer. When you, again, if you have a mortgage, your lender is going to often require that you fully insure your home. I mentioned before, my car and my house are paid off, but it's still a lot of money. If my house were to burn down, flood, natural disaster of any kind, 6 figures for the dwelling, potentially 7 figures if there's liability involved, anything like that. I wouldn't be completely destitute on the streets if I had to take that big of a, but it would be a large, uncomfortable portion of my net worth, especially when you include all the contents. It would be very, very bad. So I opt to insure that very easily. I mean, this is 50 years. Very easily, if my house were to burn down, it would be 10 times that number. So for 500 years worth of premiums, if my house burns down one time, it's paid for itself. Hopefully it never happens, but it's there if it does. Term life is similar. I'm 32, but I put in the numbers for a 25-year-old getting $500,000 worth of insurance. Similar thing, $25 a month. 50 years only costs $15,000. 50 years doesn't really make sense to do because I did it on a 20-year term life policy. Anyways, I'm not an insurance professional. Consult with somebody if you think you might need term life. I do have one because I have 2 kids and a wife that if they were to lose my income, it would be not necessarily a wipeout, but it would make their lives harder. So I pay this small premium to insure against the worst. And again, 20 years of my lost income, 20 years worth of the money that I could generate, being insured for $15,000 feels really reasonable to me. You're talking 6, 7 figures, depending on what you make. 20 years at $50,000, that's $1 million right there. You're into 7 figures already. My business insurance specifically. So took us this long to get to where we talk about Pokemon, but, and I'll get into it more on the next slide. My business insurance in particular, I pay about $100 a month. That's for 6 figures worth of coverage. I'm not going to get into the exact specifics of how much coverage I have, but my insurance is, and I guess quickly, that extends to $60,000. If I do this for the next 50 years, I will have paid about $60,000 in today's money, because I guess inflation. So these are all not inflation adjusted, but like in today's money, that's what it would work out to. One loss would be multiples of that. One loss over that 50-year period, the entire 50 years worth of premiums would be more than covered multiple times over. And 2 aspects to my business insurance. Feel free to reach out to Will if this is something that could help you. They also do offer, I'm a business, they offer incoming and outgoing shipments. If I use UPS, USPS, or FedEx, and I use signature required, they will insure north of, so one insurance ship on a shipment going in or out. I have insurance that eclipses this $60,000 that my premium would be over 50 years. So one lost card in or out. I don't ship any cards yet that expensive, but getting close a few times, I guess. And So yeah, they're doing two things. They're insuring my inbound and outbound shipments as long as I use a main carrier with signature required, and they're also insuring on-site um, collectibles and inventory. So I keep the majority of my things, as I've mentioned before. I keep a lot at the PWCC vault, and I'll do a video on that separately at some point. I keep a lot in the safe deposit boxes, and I'll do a video on that separately, where I delve into those a little deeper. But still, what I have on site in my office location, there's a decent bit of eBay inventory, and if it were all to be lost, it would be, I mean, very quickly you can get north of that number for one singular loss: fire, flood, theft, whatever it may be. So I'm covered for all those things. I'm covered for fire, flood, theft, natural disaster, and then incoming and outgoing shipments. The next slide, I go on a little bit about times I think, for me at least, insurance doesn't make sense, isn't worth it. The last slide being the bulk of the important part of this presentation. We've probably had quite a few people drop off given the dry nature of what's being talked about, but I booked flights recently. I went down to Orlando for a Collecticon. So this is actually relevant to my business. I'm one who never books travel insurance. I tend to book late. I tend to book because life can happen. I have two kids, a wife, family. Things can pop up, things can happen. You never know. I tend to just book late, and that's kind of my like self-insurance for, so I never have to cancel. I don't book it until I know 100% I can go. You can never really be 100%, but on a $500 flight, the last time I booked, they tried charging me $50 travel insurance. So that was 10%. Clearly, you can do the math on a one-time insurance purchase. If you think that more than 1 out of 10 times you're going to have to cancel your flight for some unforeseen reasons, it's a simple numbers game. You just do the math. If you're going to have to cancel 1 out of 8 times, buy it. It's going to be a plus EV expenditure. Tying back into my business insurance thing, one thing that I didn't really talk about here, but I pay $100 monthly, $1,200 a year. Before I got it, I used to buy insurance from USPS. So getting back into the whole wipeout risk, one loss being like too much to lose all at once. Numbers have changed over the years, and I'm not that I want to lose any package, no amount of money, but I could stomach losing $1,000 package these days. I don't really have to because my business insurance would cover it, but I used $1,000 at one point used to be my number. I used to insure everything over 1,000. And right here, I mentioned that, oh, I have a typo. So priority mail for $80, you can insure $5,000, approximately $80. You can insure a priority mail shipment for up to $5,000. If you do the math on that, that works out to roughly 1 to 2%, because it varies throughout the scale. 1 to 2%. Insurance, I should have mentioned in all this too. Insurance is a profitable, like, insurance is a business. Every business that sells you any type of insurance, they're in the business of making money. So even though they're making money, it can still be a wise investment by you. It can be still a wise financial decision to, again, insure against that wipeout risk. But so the break even would kind of be, if you think the post office is going to lose 50 to 100, 1 out of 50 to 100 of your packages, that's roughly where the break even would be, somewhere in between there. I know people give the post office a lot of bad rep that I think is undeserved, but I've shipped north of 10,000 packages, and I've only had a handful truly be lost, completely drop off the face of the earth. No idea what happened. Statistically speaking, if you can self-insure for priority mail, registered mail is a little bit different because they can insure up to $50,000 for $100. That's only 0.2%. 1 in 500 registered packages being lost would be the break-even point. And on a number like 50,000, that's a number that I'm not comfortable self-insuring against. It wouldn't make me be wiped out, but it would wipe out several months worth of profits for my business. It would wipe out an uncomfortable amount of money to lose in one go. Very uncomfortable. But again, I used to buy these. So I used to buy registered mail maybe once a month. I used to buy priority insurance. Years ago, I used to buy it once a month probably. And I was paying somewhere around $40 to $50 a month between the two over my past several years. I first got my business insurance 2 years ago, I think in 2020, when the numbers ballooned and I became uncomfortable with how much money I had. I did three things. I got insurance for what I kept on me, and I sent a big chunk to PWCC, and I sent a big chunk to a safe deposit box. So that was accelerated. I always had it in my mind that I should do something, but that was accelerated by, in 2020, all the numbers going up by 10%. But yeah, now that I pay $100 a month, really the way that I sell it to myself, the way my brain accounts for it, I'm really only paying $50 in a lot of ways, because I used to pay $50 a month anyways at USPS. Now I don't buy anything at USPS because I'm covered third party. So that's a great benefit for anyone operating as a business, inbound, outbound shipments all the time, very high numbers. This can be very worthwhile to you. If you're a collector alone, one of the numbers that I've seen thrown around, like say you want to insure $100,000, 1 to 2% per year. So the 50-year rule, if it's 2%, it would be $2,000 per year on $100,000 coverage. And that's pretty high. One thing I should mention too, if and when you do pursue a quote from anybody, Will included or anyone else, insurance rates are often negotiable to some extent, especially collectors insurance. It's a very niche insurance offering. So price shop around and try to compare prices and maybe give one company's quote to another company to try to have a match, almost like you're buying a new car and you're trying to price match and get them to compete for your business. So yeah, if you're insuring a collection alone, not as a business, it can still make sense in my opinion, because the 1% number would be $1,000 on 100. The 50-year rule would say $50,000 over a 50-year period. If you have one loss of your $100,000 collection, clearly that's 100 years worth of your premium. In my experiences, I'll tell you, just at my scale, decently into the six figures for coverage, I'm paying less than 1% on what my coverage is annually. A decent bit under it. And it's covering my incoming and outgoing shipments too. So funny thing, I bought a house a couple of years ago, so we had to we bought a new toaster when we moved. I bought monitors recently for going full time. I wanted to have a second monitor. As I checked out on Amazon, I looked back just so I could see. These are the types of insurances I wouldn't ever recommend buying. On the first page, I think legally in 48 states, I think there's 2 states you don't need auto insurance, but in mine, you do need liability. In New York, I think it's New Hampshire and Virginia, you do not need insurance. But for almost everybody, auto, home, and term life, especially if you have kids, I think almost everybody should have some amount of those first 3. Business collection insurance, it really depends on your numbers. If you've got a $5,000 collection and you make 50 grand a year and you could stomach the loss if and when something were to happen, it is make your own choice. But one thing I think I forgot to mention earlier that I really should have mentioned earlier, I guess the people who really stuck around and care about this topic, homeowners insurance policies have extremely low limits for collectibles. Mine in particular has a $1,000 limit. So some people might look at their homeowners insurance and say, I've got $100,000 personal property coverage on my homeowners policy. It's going to have a very low limit for collectibles almost always. Same with renters insurance. So yeah, important disclaimer well into the video when most people have clicked off. But for the people who stuck around, if you have renters insurance, if you have homeowners insurance, check your policy, ask your representative, say, hey, I've got X amount of dollars worth of a collection in Pokemon cards. They're going to be like, what? Pokemon cards are worth that much? Anyways, they're likely going to tell you that you have a sub limit for collectibles that is well under what you might think. The highest I've ever heard of is maybe 2,500 or 5,000. But frequently, if you're dealing with a 5+ figure collection, you're going to be undercovered if you're covered at all. Similarly, when I bought a computer monitor, it was $30 for 4 years of coverage on a $140 monitor. To me, it's crazy. It's crazy to pay 21% of the item's cost for an item. The first 4 years are the least likely time for a toaster or a monitor to have issues. If and when they're going to have issues, it's going to be later. It's going to be after the warranty ends. That's the way things goes. Because I don't know what the manufacturer's warranties were on these things, but probably a year on each. If my toaster were to quit, if it was a dud, if it was dead on arrival, Amazon would have given me a new one anyways. 30-day Amazon return policy, whatever it is. Same goes for the monitor. And the monitor, I have a cheap Scepter monitor, probably a 1-year warranty on it, manufacturer's warranty, if pixels were to die, if anything were to happen. So that first window and then the tail end, like if there's a manufacturer's defect, it's going to show up quickly, likely. And if not, I mean, I have computer monitors around that are 10 years old or older. So to me, it's crazy to pay 20% on an item's cost up front to insure it. But priority mail insurance, registered mail insurance can make more sense on individualized basis, as flight insurance might be able to too. Anyways, more of a finance chat, but I'm big into finance and I think it's really important. I think, and I hope, I mean, insurance is one of those things you pay for or don't. Some people go uninsured their whole lives and work out fine. Some people, you hear of houses burning down, you hear of people getting in car accidents, not having insurance, and people's lives being ruined over it. Biggest thing, a lot of people talk about Pokemon investing. Any good investor manages risk against total loss. Anytime you invest on something, you never invest more than you can afford to lose. A lot of people have shiny cardboard in their homes, in their apartments, dollar amounts that are completely uncovered that are more than they can afford to lose. And I mentioned it in the, now that we're at the very end and we're down to like 10% retention. I mentioned in the podcast too, part of the reason that I'm so vocal about insurance and so passionate about it, I guess, I actually, back in college, my apartment that I lived in like burned down while I was inside of it. I mean, I like evacuated the burning building. Thankfully, at the time, I didn't have 5, 6, 7 figures worth of collectibles in there. Everyone got out fine. No one was hurt. The building burned nearly to the ground pretty much. I had a renter's policy though. Some of my roommates didn't. I had it was $100 a year, and it was $100 a year, and it was a $10,000 personal property limit. But then it also had liability, like towards the dwelling, towards liability, any injuries, anything like that, which thankfully there were none. So if you did the 50-year test on it, 50 years of $100 a year would have only been $5,000. It passes the 50-year test. Essentially, one loss of $10,000 of personal property would cover 100 years worth of premium, the renter's policy that I had. And when I went through everything, it kind of surprised me because I'm like, oh, all I had was clothes and bedding. But then I really got into it. My laptop, my books, my PlayStation 3, my video game system. I had some N64 games and TV. When you really start going through everything you own, and I hit the $10,000 limit, thankfully not like substantially over, but I had some people that, I don't wear like the designer clothes or anything like that, but some people, they went above their limits. All they paid out was the limit. I had a couple of roommates that were completely uninsured and just lost everything. So yeah, that's where I come from when I talk about insurance. I hope I never have to use it again. I did have to use it once in the past, and I'm going to, thankfully, my parents, like, maybe my landlord might have required it. My landlord and or my parents, and then my financial brain, and it was something that I had thankfully in place. And my landlord must not have required it though, because not all my roommates had it. So yeah, anyways, gone on long enough. Feel free to shoot me a message. Feel free to shoot Will an email if you want to potentially get a quote. Shoot me a message, leave me a comment if you have any questions towards me. If it's something that is like above my non-expertise in this industry, I'll just forward you to Will or recommend you to someone else. But yeah, let me know if you have insurance policies. Let me know if you think it's something that's important, or if you're just, yeah, YOLO. But yeah, that's what I wanted to talk about. I know there were at least a couple people out there requesting it, so I appreciate everyone watching, and I will catch you all later.